Hi everyone, I'm J Sanchez with Rate House Mortgage Company. And today, we're going to break down all of the closing costs that you as a home buyer are likely to face. For this example, we're going to use a typical New Jersey home being purchased for $275,000. Let's assume we're going to use a conventional mortgage with a down payment of 5%. The first expense you'll probably have isn't technically a closing cost, but it's your home inspection fee, which is normally paid at the time of the inspection. Home inspections aren't always required, but I always recommend them because they can help you identify big expensive issues like a foundation or roof problem before you buy the home. In order to review all of your other closing costs, we have to look at a loan estimate form. The loan estimate form was designed by the Consumer Financial Protection Bureau, or CFPB for short. It was created to protect you and to give you tons of important information about your new mortgage. So before you make any decisions about your mortgage, make sure you've reviewed an actual loan estimate form. Page 1 of the form gives you information like your interest rate and monthly payments. Closing costs start on page 2 with section A, Origination fees. Origination fees are what your lender is requiring you to pay them for providing or originating your new mortgage. Origination fees are sometimes called underwriting fees, application fees, lock-in fees, or buy-down fees. But the CFPB lumps them all into one simple explanation: fees to originate, or in other words, create your new mortgage. We typically like to see a zero in this section, especially if you're going to be left with very little money in the bank after closing. It only makes sense to pay an origination fee if 1. You have the extra funds to do it, and 2. You're getting a sufficiently lower interest rate in exchange. Here's what I mean. Let's say your lender is offering a lower rate if you pay them an upfront origination fee. The first thing you need to determine is exactly how much this is going to reduce your monthly payments by, or in other words, your monthly savings amount. Then you divide the origination fee by this monthly savings amount. This will tell us how many months it will take for the origination fee to pay for itself. If you don't plan on owning this home or keeping this mortgage for at least the amount of time it will take for the origination fee to pay for itself, then it doesn't make sense to pay for the origination fee. However, if you plan on keeping everything for a longer time frame, then the origination fee might be able to pay for itself and actually save you money over time. Section B, third-party services. There will likely be third-party expenses that your lender is going to pass on to you. These typically include an appraisal fee, which provides the value of the home, as well as a flood search fee, which determines if the home is in the flood zone or not, a credit report fee, and a tax account setup fee, which helps your lender keep track of your annual property taxes. If you're utilizing a government-guaranteed mortgage like an FHA, VA, or USDA program, then Section B will also list any upfront mortgage insurance premiums or funding fees that are required under those programs. Section C, title and settlement charges. These costs have to do with the legal side of home ownership. Purchasing a home is a big deal, so we want to make sure that everything is recorded properly and you're listed as the rightful owner. You're able to choose which title and settlement company provides these services for you. For example, you may choose to have an attorney represent you, and you may choose to have your property lines surveyed. We will recommend that you purchase an owner's title insurance policy. Title insurance is a one-time expense and is meant to protect you from any past legal claims or liens against the home. You'll also be required to purchase a one-time lender's title insurance policy, which protects the lender from any past claims or liens. Your title and settlement company may have other expenses, like a disbursement fee for making sure that all funds are properly handled. There might also be smaller settlement charges, like search fees and title insurance endorsements. These charges can vary depending on your specific transaction and location. Section D gives us a quick summary of all charges up to this point. Section E, taxes and government fees. Your county government will likely charge a fee to record your new mortgage and deed. There is usually some sort of transfer tax that is due as well. In New Jersey, the realty transfer tax is usually paid by the seller, but that's not always the case, so you have to carefully check your contract to be sure. Also, homes sold over a certain amount may have to pay an additional mansion tax, which is usually the buyer's responsibility. Some states also require that you pay a mortgage tax. If you don't know whether or not you'll be responsible for any transfer taxes, please visit our website and chat with one of our licensed mortgage professionals about it, or ask your real estate agent. Section F, prepaid expenses. These expenses are collected from you now, but will be used to cover things in the future. For example, your homeowner's insurance premium will be collected and paid in full at closing, but that will provide insurance coverage for the next 12 months. You'll be required to prepay some interest charges calculated from the day you close until the end of that month. You'll also have to prepay any property taxes that are due shortly before or shortly after closing. Section G, initial escrow deposits. Escrow is like having a savings account for your property taxes and home insurance. Every month, part of your payment goes into this escrow savings account. The money builds in your escrow account interest-free and is periodically drafted out to pay for property taxes, home insurance, and mortgage insurance. We also have to start your escrow account with a certain amount of money already in it. This is necessary to properly account for any upcoming tax or insurance payments, as well as to comply with federal laws which require that your escrow account maintains at least a couple of months' worth of reserves. Section H lists any miscellaneous or optional costs that you may have. Section I summarizes the totals for sections E through H. Section J tells us what your total closing costs are. The loan estimate form also gives you the total amount, including down payment and closing costs, that you will need available in order to purchase the home. Keep in mind that if you've saved enough money for a down payment, but not enough to pay for closing costs, then you need to reach out to us, as there might be alternative options that can help you pay for some or all of your closing costs. Please visit us at theratehouse.com and chat with a locally licensed mortgage professional about all of your options as a home buyer. Thank you for watching, everyone.